Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with your Financial Freedom Friday. Today we're going to talk about STRF, STRK, STRD, MSTR, and more. But remember, none of this is tax, legal, financial investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom.
You know we finally here, right?
Well,
It's Friday then, it's Saturday, Sunday, what? It's Friday then, it's Saturday, Sunday, what? It's Friday again, it's Saturday, Sunday. Hey, 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 Let's go, let's go, what, hey, 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 now you did.
Now, before we dig in, I am not a bond expert, but I have dug really deep into learning. Where have I pulled from to learn some of this information? People like Jeff Walton or Punter Jeff from the MicroStrategy True North crew. Also from Adam Livingston. Adam Livingston has been explaining this thing inside and out, as well as one of my Inner Circle clients who will remain nameless. He formerly traded bonds on Wall Street, so I've learned a lot from him along the way as well. But wanted to give credit where credit's due. And first of all, what are the offerings we're talking about today? And those are MicroStrategy, the shares of Strategy B stock, which in August of 2020 decided to turn their treasury into a Bitcoin only treasury. Since then, they've converted their entire business model from being a software development company into a business treasury. They were the first, they're the biggest, they are the ones. Michael Saylor's doing a wonderful job over there. Ever since adopting the Bitcoin standard, they're up tens of thousands of percent, the stock price is. Next up, we have STRK. It launched in February of 2025. We'll go over exactly what that is, but it's a type of preferred share. So is STRF, which launched in March. So is STRF, which launched in March of 2025. That's a mouthful. And lastly, we have STRD, which just launched this week. So we're going to describe the stack. I'm going to build it from the bottom up of what is built on top of what is built on top of what. So first of all, we have the stack. There's your pyramid. Next up, we have Bitcoin. Bitcoin is the base layer on which everything else is built, okay? For instance, you have MicroStrategy, which is built on the base layer. MicroStrategy is a Bitcoin treasury company. They do things like yield and torque. They're literally increasing the number of sats per share, increasing the value of your shares as the price of Bitcoin goes up. So it's a derivative essentially on top of Bitcoin, with Bitcoin being the base layer. Next up is STRD on the list. STRD is a preferred share. We're going to go over the details of these in just a moment. Next up in the stack is STRK, also a preferred share, followed by STRF, also a preferred share, and last but not least are the convertible bonds sitting on the top of the stack. These are convertible notes where people lent strategy money, sometimes at a zero coupon, meaning 0% interest. They lent their money with the only thing that was required was to get their money back in a specific period of time. So if they lent strategy $1 million, they wanted $1 million back in 3 years. But there's a catch. There's convertibility, meaning at certain milestones along the way, that money that was put in can be converted from the bond, a convertible bond, into equity or shares of stock. So that's how Michael Saylor was initially raising money, right? And then came those three other products, which were STRD, STRK, and STRF. Now, the other way that Michael Saylor has been raising money is by hitting what's called the ATM, or at the money. He was selling shares of MicroStrategy directly at the money. That was part of the 21-21 plan. $21 billion of MicroStrategy shares would be diluted into the market to raise money to buy more Bitcoin, and $21 billion of convertible bonds, would be sold into the market to raise money to buy more Bitcoin for the treasury, right? That's what he was doing before. Then lately, STRK, STRF, and then STRD were added. So let's build this stack one more step. And let's talk about, what do the returns look like at each level? Well, Bitcoin has a 65% CAGR. CAGR is compound annual growth rate. That's over the last 10 years, right? You can pick any period of time. You could pick 5 years, it would be different. Since inception, it would be way different, like close to 1,000. But I'm just looking at over the last 10 years, it was a 65% compound annual growth rate. That means that averaged out each year, Bitcoin went up 65%. So if it went from 1, it would go up to 165. Next year would go up another 65% on top of that, on top of that, on top of that, until we got to where we are today. MicroStrategy has an unlimited upside, but the NAV premium, which is a very oversimplified way of looking at it, has ranged anywhere from below 1 during the bear market of 2022 to a high of 4 when MicroStrategy hit $550 a share. And that was back on November 21st, 2024. Yes, I remember dates like that. It's crazy. So what does that mean? That means that at that specific point in time, at $550 a share, based on the number of shares that were outstanding and the amount of Bitcoin held on their balance sheet, MicroStrategy was trading at a multiple of 4 times the value of the Bitcoin on the balance sheet on November 21st, 2024. Okay, that's what NAV premium means. But MicroStrategy, as I put there, I put infinite upside. It could theoretically continue going to infinity. We'll talk a little bit about that at the end. Next up on the debt stack is STRD. STRD is a 10%, pays a 10% dividend or yield. However, I put plus or minus. What does that mean? It means they can choose, they being the company, can choose to pay or not pay the dividend at any given time. It's not a cumulative dividend, nor is it a mandatory dividend, right? It can be paid. They could withhold it for a year if we're going through a tough period and Bitcoin's not doing well. So that is the one that can be plus or minus. It can be paid or not paid. Next up in the debt stack is STRK. STRK is an 8% coupon. That means it pays out an 8% yield based on par value of $100 a share. That's based on par value of $100 a share. So is STRD. That means it's going to pay out approximately $2 a share. Not approximately. It'll pay out $2 a share every quarter. And it is a cumulative dividend and mandatory, meaning if they miss one, they have to make it up in the future. And eventually, if they missed enough of them, they'd have to pay it back with a penalty, okay? Now, I put plus call option out to the side because it's an 8% convertible preferred shares. What does that mean? STRK at any point in time can convert 10 to 1 for MicroStrategy shares. So again, if par value on these shares is $100 each, that's the way bonds work, right? So if par value is $100 each on these shares, and you bought 10 of them, that means you would have spent $1,000. Along the way, you're sitting there collecting your 2% or $2 a share every quarter. So maybe at the end of the year, you've collected $8 a share. So on your 100 shares, you've collected $80, right? $80 on your $1,000 investment. However, let's say that MSTR MicroStrategy at that time is trading for $2,500 a share. If it's trading for $2,500 a share, you can take your 10 STRK shares that you purchased and convert them over to 1 share of MicroStrategy. And those 10 shares of STRK that you purchased for $1,000 are now worth 1 share of MicroStrategy valued at $2,500. That's the built-in call option. They are convertible 10 to 1, 10 STRK shares for 1 MicroStrategy at any point along the journey. It only really makes sense to do that when the price is over $1,000 though, for the obvious reasons. Next up on the debt stack is STRF. STRF is the 10% preferred cumulatively yielding shares. Okay, what does that mean? That means that every quarter you're going to get paid out $2.50 a share for every share of STRF that you own. So if you bought 10 of them and spent $1,000 on them at par value, then those shares would yield you $100 over the course of the year. 100 shares, 10% yield over the course of the year. 10% of $1,000 is $100. So you were able to collect $100 over the course of the year. And last but not least, at the top of the debt stack are convertible bonds, CBs, as I have listed there. Why do I have them listed at the top? Well, we already talked about what they are at the beginning, but as you can see, these are listed from senior to junior. The risk increases as you go down the debt stack. If something were to ever happen, if there were ever to be a bankruptcy along the way, then the convertible bond holders would be paid out first. STRF holders would be paid out and made whole, meaning if they owned 100 shares if they owned 10 shares at $100 par value, they will get their $1,000 before anybody else below them. STRK will get their $1,000 in that case, or their $100 a share before anybody below them. STRD would get their $100 a share before anybody below them. And finally, the MicroStrategy shareholders would be made whole last. That's an interesting thing to think about. When you're a common shareholder, you're paid out last in the case of a bankruptcy. That's if things go way astray here, guys, if they really go bad, okay? And again, from the latest kind of numbers that I've seen, Bitcoin would have to trade down to $15,000 and stay down at $15,000 before any of that even becomes a problem, based on how collateralized all of these things are. And again, if you want to learn more about collateralization and really how these things operate on a more detailed level, I'm trying to keep it as surface level as possible. Go follow people like Adam Livingston, or go follow people like MicroStrategy True North. Those guys are crushing it with their evaluations of these products. Finally, to put it into a bond analogy, right? Bond, not James Bond, but a bond analogy. The STRF are like investment grade bonds. Those are your, AAA rated. Those are your blue chips. Those are the ones with the least amount of risk, the ones that are your relative rate of return, right? Your risk-free rate of return, excuse me. Next down is the convertible bonds. Those are STRK, convertible bonds, because they're convertible into shares, right? And these aren't bonds, these are preferred shares. I'm just trying to make an analogy to bonds here, okay? So you have investment grade is similar to STRF, convertible, STRK, and finally a junk bond is pretty much what STRD is. They could pay the coupon or not pay the coupon depending on how things are going. These are probably going to be traded at will like crazy, and the price will likely not always be at par on STRD. They may even trade at a discount as they are right now. They are trading currently at about $85 a share, $85 a share, whereas STRK is currently trading at around 105 a share, and STRF is currently trading at around 104 a share. That was at the time this video was made. Finally, I'd like to show you Check's take on this. This is James Check from Check on Chain. So I grabbed one snapshot of his video. You see him in the upper left-hand corner there, where he was talking about this preferred stock performance summary, right? So let me give you a lay of the land right here. If you look at the blue rectangular area at the bottom of the screen, that is your risk-free rate of return, which is your Fed funds rate, aka your 10-year Treasury yield, right? And you'll notice those are hovering around 4.4, 4.5%. So that is considered up to this point the risk-free rate of return of 4.5%. So you can see where these things, these preferred yield products, these preferred stock products are already kicking the snot out of the risk-free rate of return. And that's at par value, right? But what you'll notice is as the price of these move up, and so STRD is listed on here somewhere around $87, $88. You'll see that STRF and STRK are listed at around 105 each. As that price moves up, the effective yield goes down, right? Think about it. The way you would get that number is the yield is based on a par value price of $100. So 10% of $100 is $10. But if the share price, if you had to pay $105 a share, then that STRF would not be paying out 10%. It would be more like a 9.6% yield. Same with the STRK. STRK, which normally pays an 8% yield when it's right there at $100 or at par value. When it's up at 105, that would be more like a 7.6, 7.7% yield, somewhere in that neighborhood. Again, take the 8% in that case and divide it by whatever the current share price is, because you'd be able to buy slightly less shares for the exact same amount of money is the way to look at it. And same thing works the other direction. If these things all of a sudden started trading lower, you could buy more of them when it's down there in the $85 to $90 range. And when you're buying more, you're effectively getting a greater yield on your shares. Again, if you took 10% and you divided it by approximately, let's say 95, you would, instead of getting a 10% yield, you might be getting a 10.4 or 5% yield. And instead of getting an 8% yield, you're getting about a I think it would be like 8.3 to 8.5% yield. So you're getting slightly higher of a yield. I hope that part makes sense. If it doesn't, go study how a bond yield is determined, okay? But if it's based on a par value of 100, as the stock price, in this case, these are preferred stocks, not bonds, as the preferred stocks go up, the yield will come down. And conversely, if the preferred stock price goes down, the yield will go up. Finally, this is my take on it, guys. MicroStrategy. Why do I own MicroStrategy shares? For me, it's unlimited upside. It's my bet on the future, as I believe that Bitcoin is going to bleed fiat dry over the next several years. The governments of the world have no choice but to continue to inflate prices or deflate the dollar, to devalue the dollar over time, right? So that they can inflate away their debt problems that they have. That means that dollars will go less far every single year. So I'm looking at it as Bitcoin as a store of value, and MicroStrategy is taking that and putting it on steroids and also allowing me to do options against my MicroStrategy shares so that I can increase my yield even further, okay? So that has unlimited upside. It can continue going up relatively indefinitely, okay? STRK replaces some of my savings account, right? Because if I have a savings account that's yielding 3.5%, and that's a high yield savings account right now. I know before they were up at 4.5%, 5%, but ever since they started lowering the interest rates about a year ago, end of last year, then at that point, the yields of the savings account started to go down. But this replaces some of my savings account, but it also gives me a free call option or convertibility. So it's also a little bit of a bet on the future. Yeah, I'm getting a couple percent less by owning STRK, but it's a cool place to park some cash. And who knows, if if Bitcoin goes ballistic and MicroStrategy goes ballistic, then I can convert those STRK shares over to MicroStrategy and turn around and sell those MicroStrategy shares and increase my investment that way as well, increase my yield that way. So it has that convertibility that we talked about, that built-in call option. STRF is replacing right now most of my savings account. I am going over and buying STRF. Why? Because the 10% coupon or the 10% yield beats 4.5% treasuries or a 4.5% money market any day of the week. It beats it by 2.5x almost. And then it beats my 3.5% savings account by 3x pretty much. Not quite, but just shy of 3x, right? So if I can get anywhere from 2 to 3 times greater yield being in a product that's that high up on the debt stack. Remember, STRF sits directly below convertible bond holders. And if I believe in Bitcoin as a store of value into the future, then why would I store my value in fiat? Why not store it effectively in Bitcoin, getting a 3x yield over what I'm getting in my savings account? Okay, that's my reason why. And last but not least, his poor little STRD. Guys, I'm not a junk bond trader. I don't want to take the risk there of them paying or maybe not paying. I'm not going to be trading these things around. These are set it and forget it's for me. I'm not trading these. That's the biggest mistake. I see people talk about trading STRK, STRF, STRD. Sure, you can, but that's not the intent of these products. These are designed for big pension funds, high net worth individuals, places where people and institutions can park cash and get a 2 to 3x return over what they're able over the next safest product they're able to get a return on elsewhere. Okay, that's how these things are being utilized. That's how I'm utilizing them myself. I hope you found value into this today, guys. This was a tough one. This was a lot, right? We dug in hard. That's why it's coming out a little late here on Friday. If you like this, make sure you like this video. Give it a like so that you can see more videos like mine. Comment below. What did you like best? What did you learn today? What questions do you still have? And finally, make sure you're subscribed to my channel. Go subscribe to Adam Livingston. Go subscribe to MicroStrategy True North. And make sure you're subscribed to this one. You're going to get tons of alpha when it comes to these products, okay? I'll make sure of it. Finally, if you'd like, make sure you book a course with me. You can book my TradingView and Technical Analysis course where I teach you to understand and master the charts, or take my Understanding Options course where I can teach you to trade options like a pro. Finally, I also offer individual appointments there, all at gdinerocoaching.com. Here are a few of my satisfied customers, we'll call it. And finally, I'm G Dinero. I'm here to help increase your financial literacy to help put you and your family on that path to financial freedom. Thanks for tuning in and have an awesome weekend. Take care.